Welcome. You are listening to the Financial Survival Network, and you might even be watching it. I'm Kerry Lutz, and well, we have a special guest today. Really,
Monsieur Poirot.
We do have a special guest. You are special. It's Ross Beaty. I mean, what can you say about Ross? I mean, 15 companies, 15 winners. These are the kind of people that bookies fire, that casinos eject, that racetracks bar. But when it comes to investing and it comes to precious metals, these are the types of people that you seek out and you try to attach your cord and try to get lifted up by them as well. And few people that I've seen in industry, in business and politics have ever been as candid and forthright as you, Ross. Right now, you know, you're chairman of Equinox Gold and Pan American Silver. And, you know, somebody said a year ago, and I just have to find the quote, that something to the effect that gold is going to new all-time highs. And this person said that back on January 28th of 2020. And you were that person, Ross.
I also said it in, I'm going to say probably in January 2019 and probably January 2018 too. We've been in a gold bull market actually for 4 years now. So it's no surprise whatsoever to me to see gold shoot through its all-time high at all. And I've been saying that with or without COVID. It just was I read the tea leaves and they were pretty clear.
Yeah. Well, and people ignored you at their peril, obviously. I mean, when we look at what's going on here in the world today, economically, the pandemic, everything else, what is it that you're seeing?
Well, where do you want me to start, Kerry? Do you want me to talk about gold and silver, other metals, general economy, growth forecasts? What would your readers or listeners like me to focus on? Because I can go through a long discourse on my, for what it's worth, my own thoughts on all of those subjects.
Oh, sure. And
guide me.
Well, we'll get to gold and silver later, but start out the world at large, the economic landscape, and that all ties into gold and silver, of course.
Okay, how do you be succinct here? What I see, and I sort of think globally here, not just the microscope on, say, the US or Europe, but thinking globally. What's happening right now is you've got this crazy pandemic, which is nailing economic growth all over the world, and the governments everywhere are responding by opening up the floodgates of their money printing business, and they're flooding their own countries with liquidity, and this is juicing the economy to some degree. Now, all the money in the world isn't going to cause people to go out to the streets and kill themselves. So it's not actually going to work, I don't think. It's going to be a short-term boost, but it's not going to create the long-term growth that they all want, anytime soon at least. And quite frankly, if you layer on COVID with everything else that's going on in our world, particularly the assault on nature, if I could just speak about that for a second, we have these secular challenges or limits, you could say, to the growth model we've lived in all of our lives. Guys like you and me, Kerry, who've lived in a happy time pretty much. We've had no great depressions. We've had no great world wars or any kind of great trauma. This is the first big time trauma that we've had in our lifetime that is a significant hit to any kind of normal economic activities anywhere in the world. So if you layer on to that big tidal wave today, the COVID tidal wave, the fact that our groundwater is being depleted, our air is being contaminated by too much fossil fuels, too much CO2, our ocean is acidifying, we've wiped out about 80% of the big fish in the ocean, there's a biodiversity crisis like nobody believes today. We have a climate crisis, the cost of global warming. You have a secular change in demographics. You have old people who are becoming older and they don't consume as much as young people, and young people, the growth rates of populations are declining. So, quite frankly, by 2050, we're going to have kind of a flat population, and it's going to decline after that because over 100 countries today have negative population growth. That's going to hit growth. So it's going to be a different world, and it's not going to be as happy a world as we've seen. We're going to see growth maybe 1%, 1 to 2% at most, and this is going to hit all kinds of things. It's going to change a lot of businesses. It's going to reduce consumption of a lot of stuff, and you know, you're just not going to have the same factors that are building into economic growth. So I'm not at all, you know, I'm trying to sort of summarize a lot of things quickly here. I'm not at all sanguine about the prospects for a happy fall or a happy 2021 from the standpoint of the general economy. It's going to be stressed. All the liquidity boost is not going to have a huge impact. That's the bad news. The good news is actually, if you think about the world as a sustainable thing, or a global economy as a more sustainable thing, it's good because we will get to a more sustainable type of economy. You're going to have more clean energy. You're going to have, I think, a different sort of way people live, a different kind of expectation that people eventually get. Governments are going to be followers. They're not going to be leaders, because governments are going to want to just kind of do things that like they've always done and they've always worked. And that's going to change a lot of things in terms of how our economy functions. And as I said, it's not all bad. There's going to be a lot of good stuff that comes out of this, but there's this big transition that we're going to have to live in, where people just simply kind of live like they're doing right now. They're living in a more social way. They're living, I mean, in more of an online way, less of a developer and fly around the world and build things and consume things. And I personally think it's not going to be less happy. It's going to be a smaller world, a smaller economy, not as growth oriented, but I think it's going to be okay. I think that's the transition we actually need to make. And when we get there, you know, it's not going to be a bad place. There's going to be winners and there's going to be losers. So that's kind of, in a very abbreviated fashion, kind of how I see the general state of the world over the next, say, 4 or 5 years.
And there's a lot of merit in what you said there. So in your career, which has spanned decades now, and 15 companies, you've managed to find a stable area, if you will. You've brought stability to what is historically an unstable type industry that's boom and bust. And 1 minute it's going great, and then the next minute, boom, it's gone. And kind of, we need to be able to bring that stability over to our lives and to economies and countries around the world. What lessons can we learn from what you've done?
Well, yeah, you're catching this interview at a time when you know, we are back in happy times for precious metals, and most of my investing has been in precious metals. I had a phase in the 2000s for about 12 years where I was heavily involved in copper, and that worked out pretty well because I got the timing right. But if you'd asked me to do this interview in, say, 2014, when gold was in the toilet and base metals were in the toilet and everything was falling apart, China was changing its economy from a infrastructure-based economy to a services-based and a consumer goods-based economy, and that was bad for metal prices. You know, where all the junior companies in the universe were on the floor, and even the large companies were struggling. I think we might have had a slightly different tone. My business is certainly not stable. It's very cyclical, and you know, I think the big lesson in terms of making money in this game that I'm in, which is the commodity game, is to, first of all, realize all metals are different. Every metal is different. Gold is different than palladium, is different than silver, is different than copper, and so on. And they all have their own unique demand and supply fundamentals. Therefore, the future trends are going to be somewhat different. As oil, say, is different from natural gas. And then you have to remember that if you have a long-term bull market, it's always going to turn into a bear market, and bears are going to turn into bulls. This is how this sine wave works that we've lived in for, you know, as long as I can remember. I don't think that's going to change. The commodity business is driven by fundamental factors that lend themselves to these cycles, as is the investment world. You know, bull markets tend to beget bull markets until there's sort of a hysteria and an explosion, a kind of a craziness at the top, and then everything craters, and it craters for a long time. So if you get your trends right, if you get your secular moves right, these long-term trends, you're going to be a happy guy as an investor in the generally the commodity space, but especially the precious metal space. And we're in one of those happy times right now. So again, you're talking to me when things are pretty good. Gold's just blown through its all-time high. You wouldn't feel the same if you were an investor, say, in thermal coal or even metallurgical coal,
yeah,
or oil or natural gas, because the party's over in those cases. Bad things to be in.
Yeah, agreed. And so, yeah, every bull market ends with a bust, and every bust ends with a boom. And yeah, so when you look at it here, when you look at the monetary landscape, record amounts of currency units being produced, the tendency, and I've been guilty of it myself, is to think, wow, this time really is different. And we're just moving ahead with gold and silver, and there's going to be no looking back. What cautionary words can you give us with that type of outlook?
Well, the most dangerous words in the investing world are this time it's different. Most of the time it's not really different. The markets follow the same kind of, fear and greed fundamentals, and yet, it's also true that every single day in the market is a unique experience too. It's a unique day or a unique year or a unique trend, a unique market, long-term market. Things that drive markets are broadly speaking the same, but also in detail very different. And so it's very important to be well read and to try. I've informed my own investing and company building timing and how you do it very much by traveling a lot and trying to have an open mind in terms of what other places are going through. In the US particularly, I think there's a tendency to be somewhat inward looking. A lot of that's because the US has actually driven the world for so many decades, but it's no longer the case. There's a big world out there in Asia, there's a big world in Europe and Latin America and Africa, and it's actually now probably more important even than the US. And so as the US declines in relative importance, it's still a super important, super incredible country, but as it declines in relative importance, you have to look elsewhere to what drives these long-term trends to understand them. As I said, my view is you're going to have continuing, right now at least, you're going to have continuing strength in precious metals for all kinds of macro reasons. And you're probably going to have stress in a lot of the other metals over the next, say, 12 to 24 months, because I just don't see, as the world returns to a kind of a supply side, traditional supply side where mines get going again and they're supplying metals to the world, you're just not going to have that demand that we've traditionally counted on to drive metal prices higher. So that really will affect, I think, the opportunities for investors in the base metal space, the ferrous metals, the non-ferrous metals generally, as opposed to the precious metals. And so I would be cautious looking out to those metals long term.
And you made a great point. There's a lot more going on in the world than just the US and North America. One thing, your ability to assess risk and act accordingly. So you went into Ecuador when really the reputation of Ecuador as a friendly place for capital was, shall we put it charitably, was somewhat negative, and yet you saw opportunity there and you assessed risk. What was the deciding factor when you're going into Ecuador?
Sure. Well, that's a very good example, actually. You cite about how you can realize on opportunities that others maybe don't see or don't have the comfort to get into. Ecuador had gone through, as you correctly say, it had gone through about 12 years of quite a hostile government to foreign investment in mining specifically. And in fact, it culminated in about 2008. The government just froze all concessions. It said basically, foreign investors get out. If you want to stay here, we'll increase your taxes 100%, and take everything you're going to work for to build. And it was a crazy thing. So everybody left and nobody went there. But actually, Ecuador has a very good geological endowment for all sorts of metals. It's very rich crust below the country. So you know, as soon as a new government was elected and the old guy was turfed out, a guy named Kerry was turfed out, and the oil price collapsed, which had sustained Ecuador's, you could say, you know, rather aggressive attitude to foreign investment. There was a whole different reality in Ecuador. A new government, more friendly to mining, a reality that they actually needed economic growth and they couldn't just rely on the oil price. So we sensed that, and we realized, went down there, met with the government, and they were certainly welcoming. And we decided to take a whole bunch of concessions in this very rich country that were just available to be acquired. And we acquired a lot of ground there. That has spun into a very successful development project called Lumina Gold, one of the public companies that I'm a major shareholder in, which has a very large 17 million ounce gold deposit in the southern part of the country, as well as a spin-out company called Luminex Resources, which has a whole pile of projects in the country, joint venture with Anglo American, one of the world's biggest mining companies, another joint venture with BHP, the world's biggest mining company, where they're spending their money on our properties. And they're just great opportunities. So, you know, Ecuador was kind of like Peru was, say back in 92, 93, where it had 10 years of you know, terrorism and terrible corruption in the country. New president came in, swept a broom through all of that, and the country since 1992 or 1993 has actually been probably the world's preeminent mining jurisdiction for successful foreign investment. It's been fabulous. So I think that's what Ecuador is going to be long term. In the meantime, you know, we're there, we're exploring, and we're having lots of success. It's a good place to be. And lots of other companies are there now too. Lots and lots.
Yeah. So you were ahead of the trend. And that's something you mentioned a lot, as being a contrarian. Yep. And being a contrarian means seeing the trend before the rest of the world picks up on it, and basically capitalizing upon the opportunity.
Well, it's also, you know, understanding risk. I mean, it's such a risky business, this business of mineral exploration and mining. It's so risky. It's just got risk everywhere. Country risk is just one of those risks. And if you have an opportunity to have great reward with maybe a little bit greater risk, that's okay, because that balances, say, a jurisdiction like Canada or the US, which has low risk, but it has very much less reward opportunities as well. You're not going to have typically the 10 or 20 fold capital gains potential that you would have in a more expensive and lower reward jurisdiction. So that's kind of what balances out. I mean, I went to Russia, and usually it works out for me, but it doesn't always work out. You know, I went to Russia in the mid 90s and blew $40 million developing a huge silver mine there for Pan American, and we got busted by a corrupt Russian company, and you know, sent on our way. We got our money back, but I wasted 3 years of my life, and that wasn't a lot of fun. But you know what, Kerry, I'd probably do it again. The opportunity was so great. The extra risk of being in a kleptocracy like Russia, I kind of felt it was worth it. There's one or two companies that have done okay there, and hundreds have failed. But you know what? Nothing ventured, nothing gained. You've got to take that risk to get that reward.
And another stabilizing factor, I guess, in your approach, when you put together teams, they generally stay with you for a long time. They're not, you know, this business is notorious for project by project and no long-term loyalty or allegiance to a company or a leader. And yet you've managed to also defy gravity there.
Well, I've been lucky in so many ways, Kerry. I've been lucky in timing and lucky in exploration discovery, but I've also been lucky in people, and I've had the joy of working with a lot of great people. And when you find a great team, you just want to keep them. You want to, and how you keep them, it's not exactly rocket science. At least in my, you know, you might ask them and they have a different view, but in my world, if you can have fun working together, if these are people you can both work with and socially have fun with, and in respect their disparate talents, and put together true teams where everybody respects everybody else because they do things that the other person couldn't do. You know, once you got a team like that, a functional team like that, you want to keep it, and you want to do everything you can to keep it. And main thing is if you're building things successfully, if you're having fun doing it, if the share price goes up, your investors like you, it's kind of just, it's worked. And people tend to want to stay with those groups, even though they may not be as well paid as another group, they have more fun together, and that's what life's all about. So I have been lucky. I mean, Pan American's 26 years old now. We've had, I think I was the first CEO. We've only had 2 others since, including the one that's there now. So, and the team has been, yeah, they've been together for 15 or even longer, 15 or 17 years. The Lumina group that runs the stuff I was talking about in Ecuador, they've been together for, I guess now it's almost 20 years. So it's just really good people working together, knowing everybody's strengths and respect. It's good.
All right. So you mentioned having fun. Now, when you talk to people in this business, that is not usually something that comes up high on the list. Yet inherently, you have to know you got to be enjoying what you're doing, or probably at some point you're going to look for something else to do. How do you define fun in mining?
Well, you know, because we're all public companies, we you know, all those companies you mentioned, they've all been public companies, so we're a very open and transparent group. And you know, the first element of fun is if the share price goes up, because if the share price goes down, you know, you're not making anybody any money. You have often quite unhappy shareholders some of whom express their unhappiness quite overtly. Of course, don't forget, when a share price goes up, investors think they're genius investors. But if a share price goes down, it's never their fault. It's always the company's fault. and so when it goes down, you know, it's not a very nice place to be. And if it goes up, and ours has mostly gone up for decades, people are pretty happy with you, and that's a starting point. And then, of course, if you feel you have technical success, where you know, the geologist, the engineer, they're doing things that are actually working. You know, you're discovering things, you're building mines. You know, a good engineer doesn't have to make a lot of money. A good engineer is a workhorse. A good engineer loves to build things and build them well and solve problems and de-risk things, debug them. If you can keep engineers busy, they're happy. And that's kind of one of the things that we've always tried to do, is keep busy and keep growing and keep building and go to different places. And if something doesn't work out, drop it, walk away, and get on to something else. The other thing is, you know, if you can tell a shareholder that, yeah, that didn't work out too well, but we've got a new project and it's got all this potential, they say, oh, well, okay, I'll stay on for the ride, and we'll see where we can go with that one. So that's the beautiful thing about the exploration business, is you never know when you're going to have a big hit. And if you keep hopping on a different horse, you know, the other horse might tire and even maybe die, but the new horse, you know, gets rolling and maybe galloping onto a whole new happy destination. So I don't know what it is. It doesn't seem to be all that complicated, but I've been surprised at how many people cannot seem to make it work.
Yeah, well, it's like you go into a restaurant A, and you can hear the chef screaming at the help from the kitchen, and it gives you a bad feeling. And then you go to restaurant B, and everybody seems to be dancing. They're happy, they're making money, and the customers are happy. So it's really a big factor that I don't think analysts have no fun index on their reports. You know, maybe that's what they need, a fun index from 0 to 10 to rate these companies, because people work together better and produce more when you're happy. And it's just elemental, I guess. And
they're all invested in what you're doing too. You know, if other shareholders are making money, they're making money. I mean, I think the success in the USA, take a company like, well, a lot of the high-tech companies where people have a lot of fun working, like Apple and Google, I'm sure they're great atmospheres. But, you know, I think of Southwest Airlines. I mean, in the early days, it was a fun place to work. It was a fun place to fly. People just had a blast. In Canada, we had a company called WestJet. Same thing. They were fun. That brought a lot of people to their business.
Yeah, JetBlue, also the same similar situation there. And so Equinox, 15th company, you say it's your last company. Yep. Is that with finality, or do you have other plans?
No. I think, you know, my first company was Equinox Resources. It was a gold company, gold mining company. And my Equinox Gold now, the 15th company is yeah, I think it's going to be my last one. You know, I'm not a spring chicken anymore. It's not, you know, I kind of wanted to go out with a bang as well. And we started Equinox just a couple of years ago, 2.5 years ago. And it's just shy of a $4 billion Canadian market cap right now, 2.6 or 2.7 million US. And you know, we've been, after 2 years, that's pretty gratifying. And that's kind of what I wanted to achieve. I wanted to build a company that was really highly leveraged to gold and really focus on it as a pure play gold company, make it one of the world's big companies, not a little company, not even a mid-cap company. And I've been blessed again with a great team of people who've really done the hard work building it. Some very well-timed acquisitions, because when we got going at the beginning of 2018, my focus was on building it quickly, as big as possible, not only to get exposure to gold, which I was sure was going to rise, but also to answer one of the things I think that investors were yearning for today versus even 10 years ago. The investor market has changed a lot. There's a lot more kind of dumb money out there, the ETFs, the quants, the people that don't think of value too much, and what they want is scale. So, you know, you want to build, if you're going to build a company that's a producer, go big. That's what the market wants, and we've done that. We're going to hit 1 million ounces of gold production, you know, within a year or so, and there's just no other gold company on the planet that has the growth record that Equinox Gold has, and that's what investors want these days. So it's been a very gratifying journey, and pretty much what I wanted to kind of end my career with. So yeah, so far so good.
Yeah, go out with a bang, if you will.
Go with a bang.
Yeah, and saw you say, or said PDAC, somebody was quoting you and said, in this environment, you have to go big, right? Because it's just...
You have to.
Yeah.
You know, I mean, just think of the power these days of the exchange-traded funds. These ETFs that you know, I mean, there's so many billions of dollars in capital invested in those ETFs that must be invested in certain companies that hit their criteria. The first criteria isn't anything about how many ounces you've got, what's your cash cost of production. It's one thing. It's liquidity. It's liquidity. Once you are liquid enough, they can buy you. And you've got to hit that scale, because when you hit that, you have these billions of dollars of capital dedicated to investing in your sector, and you want to be attractive to them. If you don't have it, you're going to be doomed to the kind of dustbin of history and chasing you know, things that might have been 10 years, it might have worked well 10 years ago. They just don't work today. So for sure, that's the reason we did that. But it's also the fact that in a rising gold market, you just can't be big enough, because the bigger you are in terms of the metal that you both produce and the metal you have in your in-ground reserves or resources, the more valuable, the more leverage you have. You know, every $10 rise in the gold price, or every let's just say $100 rise in the gold price, if you're producing 1 million ounces a year, that's $100 million bottom line profit. It's all bottom line, because your costs are way below that. Whereas if you produce 100,000 ounces, that's 10 million bucks. That's the leverage you have when you have scale.
And it is the power of big numbers. We're seeing it now.
Yep.
With Tesla. So right now they're qualifying for the S&P 500. It's probably imminent till they become there. And then you've got all these captive buyers who must buy your stock to emulate the index. So you're again ahead of the curve on there.
Yep.
And so the day is coming where one day you're just gonna probably hang up the hat and retire. And when you do that, what is it that you, I don't want to say like what's going to be on your tombstone, that's like too tacky, but you know what I'm saying? What is your legacy, or do you perceive your legacy will be when you're spoken of 20 years from now?
Well, the two things that I think I would hope to be remembered for, I mean, it's kind of morbid to be thinking about this, but I might croak tomorrow, and it's, you know, and life is short, right? We have one inevitable thing that happens to us all. But the two things I think that I would like to be remembered for is, number one, he was a good company builder. He wasn't just a lucky guy, just an explorer. He was actually a person who started from nothing and built multiple companies into big producing companies. And so the three that I've kind of got right now is a renewable energy business that now trades under the name Intergex, renewable energy in Toronto. Intergex, that was something that I merged with a company I'd spent about 10 years working on, and that became quite a significant clean energy producer. And then, of course, Pan American Silver, which is now the world leading, you know, basically the preeminent silver mining company in the world with a big gold production base, and then Equinox Gold. Those are the big abiding companies. They have, you know, together they have about 22,000 employees, and they're in 11 countries, and it's been those have been great fun to build, and they'll live beyond my lifetime, I hope. I mean, we're not building any of those companies to be bought out. But then the second thing is also, I don't have any great need for money. I've had a good fortune to make a lot of it, and I'm basically just going to give it all away to my environmental foundation, which is called Sitka, Sitka, the Sitka Foundation, and that's 100% dedicated to protection of the environment and preservation of biodiversity, 100%, because I just think it's so important for humans that we have a healthy natural environment, and you know, nature's getting pounded these days. I'd like to be able to be one of those people who kind of stands up for those species that don't have voices, and pour, you know, my own personal wealth into that effort. And maybe somewhere along the line we're going to be successful in some small way, and maybe I'll be remembered for that as well. And whether or not I'm remembered, it doesn't really matter to me. It makes no difference, actually. But I think it's the right thing to do, and I'm very proud of being able to support the environment, and very lucky to, in the scale I can do it at. So, you know, we're doing land conservation and all kinds of nature education and scientific research into problems, and trying to find real solutions that are science-based, and then execute those solutions. And I'm all over the map on those kind of things, and that's a lot of fun. And it's very, very good for my children and their grandchildren. So it's the right thing to do.
So, final question, and you raised the issue of fun, because there's nothing worse in humanity when people feel enslaved to their jobs, enslaved to making a living, feeding the family, all of that.
Yep.
And so on the one hand, we think of fun as like childhood fun and games, but on the other hand, you know, business really is just a big game when you get down to it. And maybe if we could inject more fun into it, like you obviously have, Ross, we could really change things a lot by doing that. How do we make life, because work is a big part of life, how do we make it more fun?
Yeah, I mean, I have to say, I don't want to sound like a pundit and, you know, expert on any kind of thing that the average person is not simply able to have in their world. I mean, so many people are trapped in a world of not having a very big income, you know, statement, or not having very much wealth, not having a lot of income, having barely enough money to exist on. So, you know, it's a pretty tough world for an awful lot of people. But I guess what I would like to see, my vision of a perfect world or a better world, is where people focus less on junk, less on consumer goods, and more on human things like meals and social events and things that don't consume resources, so that we can live more within our means in terms of a human population on the earth. And we need less stuff. We have I think the population is going to moderate anyway. I think that's pretty much behind us now, for a couple of reasons. Number one, women have more freedom, they have fewer kids. And number two, a lot of men, quite frankly, I don't know if you looked at the numbers, but the sperm count is falling like a cliff. And young men are just having a harder time having kids. And it's because they've got a lot of contaminants in their bodies that are screwing up their whole reproductive system. You should have a look at the science on that. It's shocking. But you know, so for all those reasons, population is sort of going to be under control. I think it's probably collapsing by the sort of latter part of this century, which is a good thing, not a bad thing. And then the second is per capita consumption. If we can reduce our consumption of stuff, we're not going to be less happy, but we're going to be living in a more sustainable way. So those are things that I hope we end up getting to, and people realize that they don't get happiness by having more stuff, needing more money to buy more stuff. They can actually have a pretty good time. And I think a lot of people have learned that in this COVID crisis. They've learned that they can actually still have a pretty good time, being more with their families, more with close friends, not racing around trying to, you know, get thrills and have different lifestyles that require a lot more money. And if they don't need all the money, they don't need it to work as much. And so it's kind of like that virtual circle. So that's where I think we're going to get to, at least I hope we're going to get to as human beings, living a little bit more moderately, and that's going to be a lot more sustainable.
Hey, and I always look back, fun. Yeah, I look back to the golden age kind of the United States, and I guess Canada too, is the 50s, kind of happy days, where you didn't need like the latest car, and nobody had an iPhone, and they all managed to actually communicate, and you had family dinners. The nuclear family was alive and well and thriving, and just communities. You knew your neighbors. Now there's so many places. I mean, I'm guilty of it myself. My next door neighbor is there's just somebody I wave to, basically. And maybe the world you're describing, we get more community centric, more
Yeah.
family centric, because that's where your greatest happiness comes from. I don't want to get waxed philosophically with you. I really appreciate your coming on, sharing with us your experience, your wisdom, and your desire for fun. Because when life stops becoming fun, you know, a lot of why you exist goes out the window. So thank you for addressing
Perfectly said.
that. I
Well
don't think
said.
I've ever had anybody confess that to being a motivator, but I think it is an
Big one.
extremely strong motivator, as you've indicated. So wish you the best, and we're all pulling for you. And for some reason, I just have a feeling that Equinox isn't going to be your last, but whatever you go into, it will have to be a fun endeavor for sure.
Thank you very much, Kerry. Thank you for. I appreciate those words, and I appreciate the direction of this this particular discussion. It's a good one. Thank you.